Live from Hong Kong, this is Insight with me, Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. Reciprocal tariff fears plague sentiment as investors brace for April 2nd. This is putting focus on the upcoming US PCE data, which is the Fed's preferred measure of inflation.
If you think about risk, I don't think it's a risk question of how much growth we will have or not. It's stagflation. That's the real risk out there. And that's what everybody wants to avoid.
UBS Group's APAC President Iqbal Khan talks to us about the biggest risk to markets as the tariff war escalates. He also points us to where the opportunities are. And as Indonesian President Prabowo Subianto tries to calm investor fears, questions still swirl around the new sovereign wealth fund Danantara. We'll seek some answers from the CIO of the fund, Pandu Sjahrir. Well, tariffs are front and center in investors' minds, and the uncertainty around them have sent gold to a record. It's also put the focus on a key data out of the US that will give more clarity on what the Fed might do next. Iqbal Khan has the very latest, and of course, lots of trepidation there. We await that PCE data.
Yeah, I think that trepidation really being reflected in Asian markets today. Japan, South Korea especially extending losses from a day ago, perhaps not helping. These comments from the Prime Minister of Japan, Ishiba, saying they expect a very big impact from tariffs. And you're seeing that reflected in the underperformance there. It's interesting on a day like that how we're not seeing that bad of a decline in some of these Chinese stocks. But after a really strong rally, their valuations may be looking a little less appealing, also in need of fresh catalysts. Now, one thing's for sure, amid all this uncertainty, right? Flip the board, because the performance that is shining through has been that of gold. It's up about, 17% so far this quarter, and it's risen almost every week so far this year. All this also supported by central bank buying, strong ETF inflows. We are also seeing momentum sort of in its favor if you're looking at it versus some of these other asset classes. And we had the likes of Goldman, I think, expecting 3,300 an ounce by the end of this year. Now flip the board, because traders in the meantime are going to be obsessed, I think, over some of these core PCE numbers out of the US. It's expected to be quite sticky still, with services kind of still driving things. And Has, the concern for markets is really, are we entering an environment with low growth, high inflation? Is that the issue going forward?
Well, that's right. Big question there. Now, Trump's trade policies have got a lot of economists worried about stagflation. And for UBS Asia APAC President Iqbal Khan is now the biggest risk that investors need to watch out for. He spoke to me exclusively at the Bloomberg Family Office Summit here in Hong Kong.
The biggest risk for everybody is to sort of like have this perspective of hope. Right? I think everybody needs to focus on the fundamentals. Even if you look at the U.S. economy, you mentioned there is a slowdown in growth. In a number of the fundamentals, you're not seeing that to the extent that you might read in the media. If you look at some of the portfolio companies...
It was the OECD that cut its growth projection. It wasn't the media.
Global growth projection. I'm not arguing with you around, is global growth higher or lower? Also, the reduction was not that significant. The biggest question, if you think about risk, I don't think it's a risk question of how much growth we will have or not. It's stagflation. That's the real risk out there. And that's what everybody wants to avoid. And I think most of the central banks, including the Fed, is clearly very, very focused on that.
Do you see a recession in the US, given multiple tariffs that we're looking at, given the expectations of a trade war? Prior to the 25% tariffs on autos, there was a chance of, I think, 35 to 40% of a recession in the US. Summer says 50. How are you looking at the possibility of that happening?
Look, I think we're not seeing that as of right now. Have risks gone up in terms of having a slower economy? Yes. Equally, if we look at this whole, everybody keeps on coming back to the tariffs, right? I mean, most of these tariffs have actually been short-lived, with the exception of specific tariffs and the reciprocal tariff that's been announced. And let's see how long some of these more significant tariffs are going to actually prevail and exist. If you look at what happened earlier on this year around specific high-level tariffs, you saw them being taken away post-negotiations and conversations. At the end of the day, the question will be, how do tariffs really impact the economy, and what level of tariffs impact the economy? If the objective globally, and I'm not specifying onto the U.S. administration, but globally, is to actually have a world where you are at the same level playing field and the product makes the difference. If that is, and assuming that is the objective, but if that is really the objective, then this will be a transition period. And this transition period brings uncertainty. That uncertainty has an impact on volatility in markets.
And that was UBS Asia Pacific President Iqbal Khan speaking exclusively to us at the Bloomberg Family Office Summit here in Hong Kong. Now, joining us now, Ivy Ng, APAC Chief Investment Officer at DWS. It is about tariffs, Ivy. I mean, tariffs now rekindling expectations that we could see stagflation.
I think stagflation chance may be relatively low at this point. And to be honest, even for the U.S. recession, we don't really think like this is our base case scenario.
Not even when gold is trading at such a high level. And people say that gold trading like there is a recession.
It's definitely tell you like what market is worrying about. And even as an in-house forecast, we actually expect gold will go at a higher level than what we are seeing right now. So it's tell you the market sentiment it is. But like if you look at the U.S. economic data itself, like especially when you're talking about U.S. recession, it has to be including the labor market slowdown, which we haven't really seen it. In terms of like the number that we are seeing, have we baked in some kind of tariff in our inflation forecast, growth forecast? We did. Like so, we lower our growth forecast to U.S. to about like 2% GDP growth, and then like inflation is 2.6%. It's still relatively healthy, but I'm not saying we don't have risk. If you are talking about like Q1 GDP data coming out to be negative in U.S., I won't be surprised. This is like, but we think it's more like a short-term issue for the market itself, because overall we still think tariff is more about a negotiation tactics. Not saying all the tariff will be gone. There's some tariff probably will be there, especially the tariff on China, but some of them probably can be like after negotiation, can be lower, can be like shorter time period.
But aren't the tariffs making you rethink or reassess your strategy?
Definitely.
How?
Yeah, I would say like last year when Trump getting to be a president, like of course everyone think that okay, tariff is going to hit China, but our view is like China has well prepared since Trump won, right? So they have kind of diversified their like supply chains, and then like the export to U.S. has dropped from like 19% to like 14%. So we actually think China is more well prepared. But like for other countries, if this talking about reciprocal tariff, like universal tariff, other countries relatively not prepared that well. So how should we thinking about in terms of the strategies, how we are positioning? I guess like the auto tariff is a good example. Like we just mentioned, like the Japan and Korea market actually got hit the most, and which is true because like if you look at auto, which is a key like product export from Asia, and which market export the most, which is Japan and Korea, and it's definitely hit them the most. So I would say the ongoing tariff news definitely make us rethink about, okay, how to position strategies, how to make it like on one side, we still hope that we can get some growth, but then on the other side, like how do we make more like a defensive play in the portfolio itself, more domestic driven, less export focused, like hopefully less tariff hits.
So you talk about positioning. How are investors positioning for April 2nd? That seems to be the focus right now. I mean, has everything been priced in already at this stage?
I would say no, like because like I don't think universal tariff has got priced in for everyone base case. Everyone put in like a 20% increase in China in their like scenario analysis, or some sector tariff that's people putting in. But reciprocal tariff, universal tariff, be it 10%, 25%, I don't think that has pricing. So that's part of the reason why you continue to see inflow in the gold, continue to see like a money market. People are trying to find like some place to hide until they get some like clarity on what's going on with the like tariff measures.
You talk about a place to hide, gold obviously, and earlier you talked about how you expect gold to go higher. How high do you think gold would go, given not just it being a safe haven, but also the choice of central banks buying more and more?
Our house view for the next 12 months, we will see like 3,250. It's not that high compared with like what you are seeing right now, but I would say there is definitely room to kind of like keep revising like the gold forecast, given that gold is more like a safe haven right now.
People talk about a diversified portfolio, and this is certainly the environment to have a diversified portfolio. How should that look like? Because not just in terms of geography, but in terms of asset classes as well.
I would say like, let's say put it in APAC, like for Asia Pacific. On one side, you want to like have some exposure for like the growth path from China, but then on the other side, you actually want some like kind of defensive play, like be it more like high yield stock or like even those REITs, right? Singapore recently come out with the like a reform program. Singapore market also look quite interesting and attractive for us right now.
But they say REITs are a boring way to play the market, because your returns, you could find higher returns elsewhere.
Boring may not be a bad thing. So like that is the balance of the portfolio. I think like REIT market, particularly for Singapore REIT itself, right? Because it's basically heavily affected by the 10-year bond yield movement. But we have seen that like US 10-year bond yield going down, MAS 10-year bond yield going down. And then if you look at the company itself over the last few years, it's true, the earning hasn't been like that promising, but that was pretty much because of the interest cost only. If you look at the fundamental, be it like the rental reversion, be it the occupancy, they're actually quite solid. So if you look ahead for 2025, if like a market kind of already digests all these like high interest rate, and actually like you see a few deals coming to the market, the funding costs have definitely come down. If that's the case, your bottom line finally can recover. You give your DPU growth. What's wrong with something give you 6% plus like 2% growth, right? 8% still pretty good in the current market.
Ivy, talk to us about India. What's your view on that? We're seeing some recovery right now.
Yes, I think India market continue to be a valuation issue, I would say. Like it has adjusted down. Like don't get me wrong, if you compare...
It's still high. It's about 19 times earnings.
Yes, so if you compare with its own historical average, it's not that expensive, but if you compare with the overall market, for us, it's still more
Second highest only to the US.
Yes.
So it is expensive.
Yes, market pricing like the growth that they are going to see in India, which is, I would say like it was not wrong. India still gives us a decent growth, but it's where the market expectation set. We definitely see that like since September last year, we see the earning kind of coming down. Like it's not talking about negative, just the growth rate moderate down, but market expectations are relatively high. So that is the concern, right? If you look at Indian market, in the past, they always trade as kind of premium compared with other EM market because their return on equity is also higher than other EM market. But when you look at when the return of equity is actually narrowing down compared with other EM market, then can India still justify this high valuation? So this one point we always be very mindful. So if you look at the India space, right, financial is still where we wanted to like high over there. It's probably quite boring, like you say, oh, everyone just high over there. But like this is the sector we relatively see that the valuation still makes sense. Of course,
so you think the earnings can continue to justify the kind of valuations that we're seeing right now?
For the financial side, for the India bank side, yes.
All right, Ivy, hang tight. Ivy, CIO APAC at DWS. She is sticking around. Now, still ahead this hour, after a torrid week for Indonesia's markets, we have the man tasked with making a success of the country's new sovereign wealth fund here in the studio. Lots to ask Danantara's Chief Investment Officer, Pandu Sjahrir. He's just ahead. Keep it here with us. This is Bloomberg.
There is an openness to supporting consumer demand in mainland China.
China, their latest fiscal budget release was one of the largest outside, the COVID period. So, and they are reprioritizing the private sector, boosting consumer, confidence overall with all the meetings with leaders, with CEOs and things like that. So that really helps.
But consumption and property in China still account for 70% of GDP. And there are some signs of stabilization there, but it's still very early days. And that momentum has to sustain further for us to have, stronger comfort that those segments are really bottoming.
Some of our guests sharing their insights on China's consumption story. DWS APAC Chief Investment Officer Ivy Ang is still with us. We keep talking about this consumption story. It's going to take a long time for that consumption story to play out. Do you wait?
I think we have started seeing some positive sign out from the consumer side, to be honest. Not a broad-based recovery, but if you talk to the company, especially this day during the result season, regarding their store opening plan or what have they seen in terms of in their sales and all, they did say that for the first 2 months or even the early March number is quite stable. We're not talking about a big uptick in terms of consumer recovery and all. But I would say the sentiment has been turning a little bit positive. From the number when you're talking about company in terms of the store opening this year, it's definitely there is some positive number we are seeing out from the market. But yes, I would say the market still need the stimulus support. The trade-in program is very important for the overall market. So I don't think we are just waiting for nothing, but but the movement is just relatively slow.
But when you take a look at the market, there seems to be a reversal in sentiment. All it took was about 5 trading sessions for this market to start being on the cusp of a correction.
Yes, you can say that because when you look at overall market in the beginning, right? If you look back in January, it's all about technology. That's why you see the Hang Seng Index do pretty well because of all these tech component. And people I think last month people were wondering, can it actually border the consumer sector? Can it be more broad-based recovery, or is up for a correction? Is it more a tradable market like what we were just seeing in September? But we actually tactically we actually move overweight to China, which we see. The reason we're seeing is we don't think this is just a trading market. We see more solid confidence that coming out from the market itself. Yes, in the next week, there probably is still a sentiment talking about tariff. And I don't think tariff will be completely gone even after next week, right? It's just about different type of tariff in the market itself. So the sentiment will continue to be push the market up and down for range bound in some period of time. But for us, earning is the key part we're looking at it. And the company outlook is the key. So this round during the result season, the key question we are seeing company we ask is let's say for a property company, just in the beginning of the property company result season, we ask, what's the land acquisition plan? How much you wanted to spend over there? Because this is a more key question for us than what's your result over the last 6 months?
You talk about how earnings are important. Bank earnings are coming up.
Yes.
What are you anticipating?
I think we have seen a couple of banks earnings came out I would say each of the company have their own individual issue, but border based we say NIMs is quite stable, loan growth is also quite stable. The fee growth for some of the company was relatively a disappointment itself. But I would say overall for China banking sector, probably the worst, in terms of the NPI loan growth, and then in terms of the asset quality, I think we probably passed the worst day. It's just more of the recovery really take time.
I want to touch on tariffs. It was interesting that Trump is imposing 25% tariffs on autos. Some say perhaps China could be a big winner because this is a space it has dominated in for a very long time, especially in the EV space.
I would say indirectly, I sort of agree with your view.
Sort of.
Yes, because if you look at the export, the auto export from China to U.S., it's actually relatively small. Of course, you're talking about auto part, that part is a little bit more. But overall, if you're thinking about other competitors we are having in the market, like right now the Korean, the Japanese auto company actually suffering. Can it help? Net maybe the competition is less severe than before. And actually before all this tariff, or before the competition we are talking about from other players in the region, China has been making a big progress, on EV, or even right now some smart device also turning into auto car producer, right? So that I think China had just keep improving no matter how the market situation is.
So a reversal in sentiment for China. There's also been a reversal in sentiment in Indonesia. Now, this is one market that has been smacked. The currency is close to record lows. It is expected to hit that in no time. How are you looking at Indonesia? Has there been a fundamental shift in sentiment?
If you look at the market itself, if we look at the company itself, we still think the company are very solid and valuation is very cheap. We are seeing a couple of Indonesian bank results this day, right? We have seen that they actually increased the payout ratio. They actually initiate the share buyback. So for the company itself, I think it's very solid. I think the question is really about the trust on the government now.
So how would you play this market?
For us, Indonesian bank is still a key player in the portfolio, given that it's 60% of the Indonesia portfolio is like that. We still we pick the high quality high yield names in Indonesia, but as a country, we won't overweight Indonesia at this point.
But you would buy the dip? Because some of the banks that you like perhaps could be looking really, really cheap right now.
I would say that the one that we have existing exposure, we continue to keep it, but incremental adding at this point when we're still waiting for more clarity on the market, particularly from the government fund, probably will be take a break.
What would it take for you to reverse your call on Indonesia? Because when it comes to valuations, they're looking really cheap, but when it comes to fundamentals, perhaps in terms of the politics and how the country is run, that is in question. What would you like to see?
I think right now it's more the finance minister definitely take a very key role right now. She actually give people confidence that Indonesia will still be very prudent in terms of the physical spending and all. So how the government going to fund all the big projects they have in mind, what are the exact number it is, and the plan of funding, more clarity of that will definitely help us getting more comfortable. Instead of we are worried about the whole country, all the listed bank need to help with serving the country development in the future. So I guess there's more clarity from the government. That's probably will help us.
And as a whole, emerging markets, do you expect them to have a better year in 2025?
I think China, we expect them to have. But for
could China then lift most of the other emerging markets?
I would say it's quite hard. It's probably keep it neutral. For EM right now, we keep it neutral. The reason I'm saying that it's because India, as we mentioned, as we discussed, there is still an issue regarding the earning funds, right? I guess probably second half of the year, you will start seeing some India earning potentially picking up. But the whole ASEAN right now is really, really tough in the market. Last year, if you look at EM, it's basically EM Asia helping the EM performance. But this year, EM Asia, I can only say China probably will help, but how much heavy lifting can China do from this level onwards?
The risk appetite still fragile. Ivy, good to have you with us. Ivy Ng, CIO APAC at DWS. Coming up, Indonesia's President Prabowo banking on a new sovereign wealth fund to boost growth. We ask its CIO how he's planning to deliver on that. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Foreign investors are reassessing Indonesia's economic outlook. This comes amid concerns about government finances and the growing role of the state. Indonesia's stocks and currency are down, and they're among the bottom performers globally this quarter. Avril Hong joins us again with more on the country's new sovereign wealth fund it is in the spotlight.
Absolutely. And I think the idea behind it, having another sovereign wealth fund really to kind of drive this foreign investment into the country, but just taking a step back and looking at the pressure on some of these Indonesian assets so far this quarter, look at the stock index as well as the currency, immense pressure, and among some of the bottom performers so far, if you're looking across the board versus some of these major markets, certainly the growth outlook is a concern, perhaps some question marks as well amid the accumulation of political influence. We have that sovereign wealth fund, as you said, in the spotlight, and Prabowo has said that, you know, this could drive some of the investments to the tune of $900 billion. Flip the board, just wanted to give you a further sense of what we're seeing in the stock performance of Indonesia. So far this year, it has come down actually to some of the lowest levels since 2021, and the slide has also been seen since the later parts of last year, Haas. Amid all this, we have been also seeing how this new sovereign wealth fund has sort of really big names as part of its advisory board. We have on board some of these former Indonesian presidents, including Jokowi, as well as Susilo Bambang Yudhoyono, as well as Ray Dalio and Jeffrey Sachs. So among the considerations that have been helping to alleviate the worries for markets of the fund's leadership, Haas.
April, thank you so much for that. Well, for more on the fund's investment strategy and objective, we're joined by Danantara's Indonesia CIO, Pandu Sjahrir. Pandu, good to have you with us.
Hi.
First off, I just wanted your comments on the market performance so far. We saw JCI is down about, 10% year-to-date among the worst performers. We also have the rupiah trading near record lows. How are you assessing investor sentiment and turnaround in investor sentiment?
Yeah, thank you. Thank you first. Thank you for having us here. I would say this is the first week, really. Danantara is about 5 weeks in the making. This week was a big week for us, where first we transferred some of the key assets into Danantara. It will be worth about $900 billion worth of assets, about 1/3 of the stock market. And I can see why there's obviously concerns regarding this. The two key concerns has been about transparency and governance. What's been good about this week, actually, one, we introduced the 15 managing directors within Danantara. 3 are foreign nationals. All of them really came from leading institutions globally, and I think the market reacted well to that. And the second one is actually the introduction of the new management team of the large state banks. So actually, since this Monday to today, the market in Indonesia has really performed well. I think it's probably been up at least in the 8 to 10% range, which is good because there was so much skepticism coming in, and I understand why, both domestically and internationally. So those two key concerns about transparency and governance we try to answer through this week. And obviously this is the first step. We're going to have, time will be our friend in terms of how we do
but there
going
really
forward.
is a sense that there is a lack of independent transparency. Oversight, for that matter. I mean, it is especially so on the back of the failure of 1MDB. I'm just wondering how you're looking at this, because even though we talk about an advisory board with a lot of the big names, it is overseen by the president himself, and the CEO is actually was the former manager, campaign manager of the president himself. How might that play out?
Yeah, I think one of the things that we fully realize that all eyes is on us, not just domestically, but also internationally. So we understand there's key issues about transparency, governance. Those are kind of the two big themes. So when you look at all these 15 professionals that we have recruited in the span of 4 weeks, we are so happy that they are really top of their class in whatever it is that they do. So out of that, 3 foreigners, 2 of them are actually in the risk side of things. They are really top of their class. And the last thing to comment on it, this is obviously in a way an evolution of state-owned enterprises. Essentially under the new law that was established earlier this year, all of the state-owned assets will be fully corporatized. Its main focus is really for profit and for shareholders' interests.
But it's pretty curious because it is being funded by a reallocation of the national budget. Essentially what you're doing is you're skimming some of the budget from various sectors like education, like infrastructure. Some say it's not strategic. It is actually eroding public confidence.
So for the last 20 years, all the dividend, this is just the dividend, came to the state budget, and all of it done obviously for public goods. Today, starting this week, that dividend will be used for economic gain and economic interest. What is interesting, what you pointed out, as part of the GDP calculation, usually that dividend will be used for the G. Now that dividend will be used for the I, which is the investment. And when you talk about the economic growth of 8%, which is the target of Pak Prabowo, there's been 5 times in history where Indonesia hits 8%. All of it has been driven by I, which is the investment side. So that's why I'm actually very optimistic that as long as we execute this well, right, and focus on the execution, this will be a big boost to the country. Because when you do on the G, you don't calculate IRR. What you do create a social impact that will take time. Here, our focus is really on things like NAV, IRR, things that I think your watchers, people in Bloomberg, are accustomed to. So really the focus is for profit and economic growth.
What kind of dividend levels are we looking at?
So the first 2 weeks we'll receive about $8 billion of dividend. Obviously, there's also interim dividend coming out. So within the next 12 months, it'll be probably closer to $20 billion of dividend that we need to reinvest in projects. So we are, in a way, we're agent of economic growth. We focus for profit, and we'll look at key sectors that we need to invest to boost this growth.
Why is there a need for Danantara? You already have a sovereign wealth fund in INA, which is being run by a very well-regarded man. You also have state-owned ministry.
Yes.
I'm just wondering, what can Danantara do that INA and the SOE can't do?
Yeah, so it's a good question. Actually, sovereign wealth fund is a new concept for us Indonesians, but globally it's not new. It's been there since the 1970s in other part of countries. What is also unique in countries, there are multiple sovereign funds. You have it in both in the Middle East, you have it also within Southeast Asia, where countries have 2 or 3 different sovereign funds. The focus for us in Danantara, because we are consolidating a lot of these state-owned, are twofold. One is really focus on the operation of these business and make it global champions, really focusing on that, right? And number 2, reinvesting that dividend for profit and be an agent of economic growth. So that's kind of the key focus on us. I mean, if you say which model it is, we've seen enough models, but what's important with Danantara, this will be the 6th largest sovereign wealth fund in the world. We are able to invest globally, right? Not just in domestic, we can invest globally in any type of securities, whether it's debt, whether it's public, and any type of instrument. But the focus is for Indonesia.
You emphasize the fact it is for profit. You want to make huge returns. How do you ensure better returns on these dividends versus keeping them within the SOEs, which are already generating high returns?
So, you know, within the SOE, each of the managers make independent decision, right? Their focus is total shareholder return, which is the increase in the book value of their businesses, plus whatever dividend they want to give to shareholders, including minority shareholders. As I mentioned earlier, about 1/3 of the stock market really is part of the Danantara company. So they also have to pay, in a way, dividend. What we do, different than before, those dividends will be reinvested back for profit. Beforehand, 20 years ago, for the last 20 years, all the dividend goes to the government and it will be spent for whatever is the need are, which are not measured in return. Right? So this is a fundamental shift, and obviously there's been very good precedent globally, and we want to bring best practices into this.
Talk to us about how you will invest. Will you invest domestically, externally? What's the model you're looking at? Are you looking like a Temasek model, or talk to us through what you have in mind?
At the end, Danantara is Danantara. We don't need to mention all the other names. We just focus on what we do. We want to focus on certain key sectors, for example, digital infrastructure. We want to focus on energy transition, like renewable energy, EV, battery. We want to focus on food security. We want to focus on healthcare. These are things which I think there's a lot of good opportunities, and we'll focus on that. And all of it can be
domestically, internationally. What are you looking at?
So the way we do it, it can be project JVs with leading players, global players that bring either knowledge transfer or technology transfer. We're also open-minded, and it's now already on the table, whether we invest globally as a minority shareholder, but strategic minority shareholder, or large shareholders, in companies that bring those two skill sets into the country.
Is there an ideal ratio? Is it a fair question to be asking, when it comes to domestic investments and international investments, what would be an ideal ratio for you, for Danantara?
Each country is different, but I would say we are still a user of capital. Indonesia, because the growth is so good. I just have to remind, Indonesia among the G20 countries is one of the lowest in terms of debt to GDP. Inflation is still really in check. Our economic growth is still at 5%. And it seems as though the past 2-3 months, it's been a lot of news flow that seems to suggest it's going the other way. But the performance of the bank this week shown that actually the economy is still doing okay, and also the fundamental of these banks are doing okay. In terms of the mix, I would say the first 12 months will be more domestic, JV projects domestically, but we're open-minded to also go. And that's why we also signal in the first 15 people, the senior MDs, some of them also came from other countries outside of Indonesia.
I'm just wondering, in terms of the SOEs, are you planning to sell stakes in some of the SOEs? What might be the thinking be?
Yeah, again, at the end, the total shareholder return. So the focus of my colleague Donnie and the team within the Danantara operation is how do you focus on bringing scale? Right? Scale is most important. So can we merge different entities into one? Some of the non-core asset, can we spin out and put it together? And of course, we have to tap into the public markets, right? And these are, opportunities that they have to do. The good thing, and different if you're under the new law, we don't have to go to parliament anymore in some of these key activities. So it's become less political, right?
So you're willing to sell control to private buyers? Am I?
No, I didn't say that. All I'm saying is that those are things that should be on the table if it is strategic and it makes sense for the companies, for a particular company. So these are things that obviously open discussion.
So even if the buyers are foreigners, you're open to discussion if it makes sense to you?
As long as it brings total shareholder return in the long term. So there has to be parameter, there has to be guidance on how we look at things.
Are you planning to raise bonds? Are you planning to perhaps raise bonds backed by SOE assets?
I would say SOE asset. Let SOE asset decide what's best. The manager of these assets, focus on that. Our job is obviously try to find the best managers for that particular business. And foreigners, one of the things our president said, for some particular businesses, we should hire global talents. And Danantara, as you know, is probably the first project where it's really focused on human capital. This is a large-scale human capital work and project, and including in some of the state-owned businesses. Don't be surprised if we have global talents coming in and try to help shape these businesses.
But Pandu, as you make your rounds, what's been the reaction? How has the reception been, especially on the back of the volatility we were seeing in the Indonesian market?
So this week has been a good week. For us, the reception, I think, has been positive, both from fixed income holders, also from equity holders. They like the fact that we have delivered on what we have said, at least in the first stage. Again, I keep on reminding, this is the 5th week of work. They also found it surprising that we were able to collect this amount of talent within a short span of time. So, the next question is what's next? I think now what's next will be obviously the next set of companies within the SOE. How will these managers be? Who will be the next people coming into Danantara within the next 6 to 8 weeks? And obviously, what will be your first set of investments? And I think that we will have that discussion the second half of this year, where we are ready to start investing. And that will be, we can do it alone, we can do it with partners, but obviously really focus on returns.
How does success look like?
Well, success investing is a long-term business. Maybe the main difference is we don't have to sell any of our stake. Really want to focus on a couple of things. Number one, obviously, as I mentioned, the total shareholder return. But number two, job creation. And it will be successful for me personally if we create high-value jobs, right? And that's important.
In industries like?
In industries such as the renewable energy space, the downstream space, digital infrastructure, where Indonesia is one of the very few places in the world that is underinvested. If we can bring global talent and have knowledge transfer, technology transfer, I see that as a success because it actually raises productivity per capita in Indonesia. And that's what, personally, I would love to solve.
All this is happening at a time when there's so much uncertainty. There's a lot of talk about tariffs, reciprocal tariffs in particular. Indonesia will not be spared. How are you looking at the implications on sentiment?
You know, there's two sides of the coin. There's obviously, there's some that may actually hinder businesses. But for us, the way I see it, this is a great opportunity for us to be able to leverage. One thing Indonesia has always had is great natural resources and also young population that's also growing wealthier. These are two trends that are not stopping and will always continue. Our job within Danantara is how do we leverage and maximize that? How do we maximize from the story of natural resources into the growth of human capital? And I think what we do, in a way, as financiers of these efforts, we have to really focus on how to bring best human capital into Indonesia.
All said and done, where do you see Indonesia, at what pace do you see Indonesia growing this year?
Yeah, I think, you know, whatever that's been told by our Ministry of Finance, I follow them. They're the expert at it. I think hopefully there'll be a surprise, especially on the investment side, because that's my core focus. So really the next 6 to 7 months is really to be able to deliver on the things we have said.
Can you deliver, though, given the fluctuations, especially in the Indonesian rupiah?
So in terms of the rupiah as well as what's going on domestically, we've actually been very excited about the interest by both investors from public side and private side on these type of projects. So I really focus on the investment. I really focus on the projects that can bring value. And so far, the interest has been very, very good. So this week has been a very encouraging week for all of us.
And the biggest challenge for you would be, because you've been pretty upbeat about the possibility of meeting your own targets, what could hinder your goal?
No, I think, you know, obviously time will be one. Obviously, what is it called? Things that's outside of our control. Geopolitics will always be a key concern for us because geopolitics affect any investment decision. So, you know, I don't have a crystal ball on this. That's why coming here and meeting investors have been very helpful for me to be able to see what potential blind spot, right? But ceteris paribus, everything remains the same. I think so far we're quite optimistic looking at all the trends and the opportunities that has been presented to us.
And of course, there's growing concern about a possible stagflation in the US. Might that spill over and impact Indonesia?
Yeah, for Indonesia too, the next 20 years, and this is a bit longer term, right? We have to be able to stand as a nation where we can have all the security needed, including food, including energy, and our human capital becomes hopefully the biggest asset that we have, right? And for that, Danantara is created. This is one element, obviously. Government is doing what government does. But from our side, is how do we bring the best global talent to come here to Indonesia and to be able to share, right? Both from knowledge and technology.
But Pandu, thank you so much for joining us. And that was Pandu Sjahrir, CIO of Danantara, Indonesia. Let's take a look at how Chinese tech, Asia's tech in particular, is doing. It's falling 10% from that March high in correction territory. Of course, we've been talking about how they've been under some pressure. All it took was 5-6 days for those tech shares to slump into correction territory. Take a look where we are in terms of HS Tech, down about 1.8%. The movers right now, we have Alibaba in negative territory, but the biggest losers, Meituan, Tencent and Baidu. Of course, these are the companies that have led the tech rally that we've seen on HS Tech. Now, let's take a look where we are in terms of the Indian markets, trading for about 2 minutes now. It's seen some turnaround, but it is a mixed picture in the first few minutes of trade. The Sensex in negative territory, but we're seeing the banking index, the Nifty Bank Index, in positive territory. And in terms of the Indian rupee, trading at 85.6025, is currently up by 0.2% versus the USD. Now, still to come, the Hong Kong Rugby Sevens returns, putting the city's brand new $4 billion stadium to the test. We'll have live coverage from that event next. Keep it here with us. This is Bloomberg. Well, Hong Kong's shiny new $4 billion stadium complex is being put to its first big sporting test this weekend. Rugby fans from across the world will flock to the 50,000-seat venue at the Sevens tournament moves to its new home. Our China correspondent Min Min Lo is testing it out at the new Kai Tak Stadium. Min, what's the mood like?
Well, it's not as electrifying as you would think, and the stadium is actually quite empty, maybe because it's a Friday and that's quite normal. But this weekend, though, we're expecting the stadium to be packed because organizers say they sold a record number of tickets. 139,000 visitors expected to fill the stadium over the next 3 days. And it's not just an event for sports fans around the world. It's also the families who want to soak up the carnival atmosphere. Also the finance professionals who will be piling into VIP booths after the back-to-back investment conferences this week in Hong Kong, all part of the Hong Kong government's effort to bring back the tourists to the city after we saw this exodus of expats after the pandemic. Have a listen.
Pre-pandemic, we probably looked around 50% of our visitors were overseas. We dropped, obviously, during the pandemic. Post-pandemic, we got back to around 30%. But one of the other upsides of during and post-pandemic was we attracted a lot more local visitors. So now, coming into Kai Tak, we're in a really great place where if we supplement the increase in overseas visitors, but also build on the local visitors that we had, local fans that we had during that time, we're going to be a really healthy place.
So the government invested $4 billion to build this sports park. It's meant to reclaim Hong Kong's status as this international destination for mega events after Hong Kong lost out to arch rival Singapore when it comes to hosting the likes of Taylor Swift and Lady Gaga. Of course, the next big event here is going to be the Coldplay concert. And so that turf you see behind me is going to be rolled up, put into refrigerator trucks, shipped across the border to Zhuhai to a dedicated farm which will rehabilitate that grass.
Well, there's been a lot of excitement, Min. What are some of the features of this new stadium? Give us a bit of a tour.
Yeah, so one of the things I think fans will be most excited about is the south stand over here on my left side, because that was where the heart of the party was back in the old Hong Kong stadium, where people will outcompete each other in their costumes. Sometimes you get randomly sprayed by showers of beer or mysterious fluid. And in order to preserve that spirit, the designers actually replicated the south stand down to the concrete entranceways and the number of seats. There's also this retractable roof that takes half an hour to open and close. And as the chief executive, John Lee, had said, like that retractable roof, he said, the sky is the limit for Kai Tak Stadium.
Of course it is. China correspondent Min Min Lo there. I'm looking forward to the Coldplay concert, which I don't have tickets yet to. Now, we just want to show you some pictures over in China, where President Xi Jinping is meeting with foreign business leaders at the Great Hall of People. We know that the likes of Sanchez, Bill Winters is among those executives in Xi's meeting, along with the likes of AstraZeneca's Pascal Soriot, meeting with Xi Jinping, Sanofi's Paul Hudson, of course, Rajesh Subramaniam of FedEx as well. Xi Jinping meeting with those foreign leaders. She says investment by foreign firms play a very important role, of course, comes at a time when China is looking for investments into the country. Well, those business leaders include the likes of Bill Winters, AstraZeneca's Pascal Soriot as well. Well, plenty more ahead. Keep it here with us. This is Bloomberg.